Ladies and gentlemen, welcome to our weekly investor update. I'm your host, Rachel Curlew, AVP of Investment Banking. We're happy to bring you another installment of our weekly uploads. Today, we're looking at DOLLA Financial Services Limited and Lumber Depot Limited. Joining me today is investment advisor Brandon Thomas, who will be sharing the panel with me for these discussions. Welcome, Brandon.
Thanks, Rachel.
If you're a fan of the content, then don't forget to subscribe. Also, hit the bell to stay up to date with the channel. We upload content like this every week. If you want to embark on your first investment journey, you should take that step with Mayberry. Follow us on social media to learn more about how you can get started today. So let's get started with Lumber Depot. Recall, Mayberry listed this hardware and building supplies company back in November 2019 at $1.20, raising about $170 million from the market. It currently has one location in Papine and has operated out of that location for over 2 decades. It has a wide customer base, from large building contractors to small homeowners, allowing them to secure annual revenues of $1.5 billion. We are seeing here where the stock is trading today at $2.23, but at a very low PE of about almost 11 times relative to its trailing EPS of $147 million and a junior market PE of about 11 times. The stock does have a 52-week high of 370, so let's see what's going on here and assess whether we think the stock can trade up back to 370 in the short to medium term. So for the 9 months period ended January 2023, Lumber's revenue remained relatively stable at $1 billion, but their cost of sale increased by 3%, which resulted in a 13% dip in gross profits for the period to $223 million. Expenses also increased marginally by 2%, but other income fell off by about 73%. Despite an 83% improvement in their net finance costs, Lumber booked a 25% decline in profits to total $106 million relative to $142 million booked for the prior period. Although their profits are down 25%, it's important to appreciate there's a lot of competition in the market right now. But despite this, Lumber has still managed to maintain its sales level at just about $1 billion with just one store in Papine, as I mentioned earlier. And according to PIOG, we have seen a slight dip in the construction sector, where PIOG is projecting a decline of almost 5% for Q4. So despite all of this, and examining their quarterly profits on the other slide, Lumber Depot profits are just slightly below historical quarterly profits. We are seeing a significant spike for Q4 2021 and Q1 2022, but we need to appreciate that this is due to the significant growth we saw in the construction industry back then of about 5%. The company, going back to the first slide, the company does have over $660 million in equity and cash combined, which puts them in a position to consider new investments, which may include an additional store, taking advantage of their existing cash on a balance sheet of $111 million, coupled with some debt. Remember, they pretty much have no leverage right now. This could improve Lumber's long-term market position. If one store is generating annual revenues of $1.5 billion, let's imagine what 2 stores could bring in. Looking at this slide, even if Lumber maintains its existing sales level, the stock is still undervalued at $2.23. It's trading at a PE of just about 11 times, below the junior market of 17 times. So if we adjust the stock to the junior market average PE of 17, that would reflect a price of $350, almost in line with the 52 high of $370. And we do believe PEs will trend back up within the next 12 months. So all else equal, we believe Lumber should improve in the short to medium term. What are your thoughts, Brandon?
I couldn't agree more, Rachel. Lumber is a company that has done really well. They do have efficiencies, and operating out of one location is very impressive. I would love to see them, have plans. They did speak about in 2021, they spoke to plans to, potentially go into a second location, whether they do that by acquisition or to, building their own hardware in another location. So I would love to see those plans be, revisited. And I love an update from the company. But in terms of what they've been able to do, despite the tightening of margins, during the pandemic, it has been really impressive. So I really love Lumber, and I think that the potential is really great for them to really go on to get more locations and expand their customer base.
Absolutely agreed there. So let's get started with Dollar Financial Services. Over to you.
All right, so moving on to Dollar Financial Services Limited, the hot IPO of last year, which got over, roughly 5 billion in applications and the largest raise ever on the junior market. I believe this stock is one that a lot of people are, have their eye on, and we're going to look at the numbers to see how they did last year. So last year they would have increased their interest income by, around 95% to 739 million. This is really impressive, which is due to them growing their loan book aggressively last year. They raised 500 million during the IPO, and then they also went on to do a bond raise of $1.1 billion, which they have deployed, and that has increased their loan book by over 135%. So now we're seeing the fruits of that with the interest income increasing significantly. Interest expense would have gone up just 47%, which led to interest income, going up by a whopping 103%. Now we see where that led to a net profitability of 280 million, which is really impressive for Dollar, and that would have been an increase by 116%. What's even more impressive is that their ECL, the expected credit losses, has remained just under 5% in an industry where the average is 10%. That's really impressive. That shows a certain level of efficiency, and also, above all, shows the quality of their loans. Mr. Mears, their principal, spoke to the fact that in a recent interview, he spoke to the fact that the majority of their loans are to businesses and entrepreneurs. So they're not into focusing on consumer lending, but majority of their loans are to businesses and entrepreneurs, which have a greater ability of repaying. So we see where the price, currently is roughly around $272, and that gives us a PE of 24.24 times. Now that is still above the junior market average, but with slated growth that should continue, and aggressively, I might add, I do believe Dollar is still a good stock to buy right now. So moving on to the next slide, we see where the quarterly profit movements, how that has trended, since last year. They would have gone up significantly over the last couple of quarters to where they've now done their best quarter ever in Q4 of last year. So, management spoke to the fact that, they have been focused on growing their footprint locally, and they also will be growing their footprint regionally. And I'll get into that a bit more. On to the next slide, you can see the stock price movement, which has held steady in the 280 to 320 range since last year. Ever since the IPO, it has been in that band with spikes up to like 374, and now it's down to 272. And as Rachel pointed out, during her presentation, that we do expect PE ratios to eventually raise up as inflation continues to go down, and therefore interest rates should follow. We do expect PE ratios to start trending up. So as I said before, Dollar is still one to watch, and one that I believe can grow massively. So moving on to some of my rationale as to why I believe Dollar is still a good stock to buy. They've been aggressively growing their loan book. As I mentioned before, it has grown by 135% last year. Kadeen Mears spoke to the fact that they are going to be going back to the market, but maybe through their subsidiaries, so Dollar Guyana, which is, something that has grown for them significantly last year. They said Dollar Guyana might go to the market to raise funds, as well as Ultra Financier, which is something that I'll touch on in a bit. As I mentioned, less than 5% ECL, very, very impressive in an industry standard of 10%. They also paid 2 dividend payments last year, which I believe they're trying to establish themselves as a company that pays dividends, regularly. Mr. Mayor spoke to the fact that whenever they beat their targets, they will be paying a dividend to really give back to their shareholders. Speaking about Ultra Financier, that would have started as a subsidiary of DOLLA, fully owned in November of last year. And in just 2 months, they were able to grow that loan book to 250 million, which again is really impressive, to the point where Ultra Financier contributed just about 12% of the overall profit of last year for DOLLA. And again, just to reiterate, they just were open in November of last year. So just 2 months of operation. For those who don't know, Ultra Financier is an asset-backed loan institution where they lend against luxury goods, luxury items, cars, property, and it has really taken off by storm, and that will continue to grow and contribute to the overall profitability. Mr. Mears again spoke to the fact that they have an acquisition in the pipeline that should be completed by summer of this year. So that's something that we can look forward to in terms of inorganic growth. And as I said before, I expect, the aggressive growth to continue. I expect this company to grow their loan book over the next year, and therefore the profitability will follow. So I don't know if you have any thoughts on the matter, Rachel.
DOLLA has definitely been growing consistently quarter over quarter. Total assets is now at 2.25 billion, up from 861 million. They've doubled shareholders' equity in the last 12 months. These guys are really doing a good job, and they're expanding at a significant pace, and I expect them to continue to deliver strong results. They did hint at completing the acquisition soon. So, but outside of that, organic growths are really good. The stock is trading, above unit market PE, but I believe the stock will grow into that valuation very soon.
I agree. Couldn't agree more.
Okay, so that's it for today's discussions. I'd like to thank our viewers for tuning in. Your support is always appreciated. Also, thank you, Brandon, for another great discussion on our panel. If you're curious about our updates on our virtual investor forum, then find us on social media. We share our live stream dates and upcoming guests on our official social media pages. So give us a follow and stay on top of all things forum related. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications. Keep safe, and remember, wise investors, slow and steady wins the race. Bye.